FA1 Part B. Recording and Accounting for Cash Transactions. Chapter 10. Maintaining Petty Cash Records. 5. All petty cash vouchers are recorded in the Petty Cash Book. The purpose of the Petty Cash Book is to provide an accounting record of the petty cash transactions, and to allow for the posting of petty cash expenses into the general ledger. On the left side of the Petty Cash Book is the debit side, which is used to record all the cash receipts. On the right side of the Petty Cash Book is the credit side, which is used to record all the cash payments. And in the middle, between the two sides, is a column for the date. At the start of a new double page should be the impressed amount as a balance brought down on the receipt side. 6. The petty cashier must record and analyze all the payments out of petty cash, using the vouchers and supporting documents. The Petty Cash Book needs to be written up regularly, typically every 2 to 4 weeks, but the Petty Cash Book has to be written whenever cash is drawn from the bank to top up the impressed amount in the petty cash. The details of the payments from the petty cash vouchers are recorded on the right side of the Petty Cash Book, and they are listed by voucher number order and date order. So the vouchers need to be sorted by date before they are given a number. These are the columns that are usually found on the payment side, the credit side, of the Petty Cash Book. A column for the total payment of a voucher. A column for the voucher number. There will be several analysis columns to analyze the expense. A sundry column. A column for the details. And a column for sales tax, VAT. This is the procedure to follow when writing up the payment side of the Petty Cash Book. Step 1. The voucher must be entered one at a time, either by date or voucher number order. The following needs to be filled into the Petty Cash Book from the voucher: the date of the voucher, the voucher number, and the total amount paid. Step 2. The petty cashier then analyzes the payment, which means to explain what the payment is for. For an example on how to write up petty cash payments into the Petty Cash Book, see page 214 and 215 of your interactive text study guide. Stop the lecture. Answer the question on page 215 and 216 of your interactive text study guide. These are the columns that are usually found on the receipt side of the Petty Cash Book. A column for the total receipt of a voucher. A column for sales tax, VAT. A column for net receipt. A column for the details. 7. When there is sales tax, VAT, included in the petty cash payment, there needs to be a sales tax, VAT, receipt to show the sale tax, VAT, transaction, and there needs to be a sales tax, VAT, analysis column in the Petty Cash Book. In some companies, it is part of policy to ignore sales tax, VAT, on petty cash payments, because the amounts are small and are more trouble than they are worth. A sales tax, VAT, receipt needs to show the total payment, the sales tax, VAT, paid, the supplier's name, address and sales tax, VAT, registration number, and the date of the payment. When recording sales tax, VAT, in the Petty Cash Book, there needs to be an analysis column for sales tax, VAT. The amount entered in the total payment column in the Petty Cash Book will be inclusive of sales tax, VAT. The amount of sales tax, VAT, paid will be entered into the sales tax, VAT, column, and the amount in the expense analysis column will be the total amount less sales tax, VAT. For an example of a petty cash payment that includes sales tax, VAT, see page 218 and 219 of your interactive text study guide. 8. A new page in the Petty Cash Book is started every time the float in the petty cash box is topped up to the impressed amount. And when the impressed amount is topped up, the Petty Cash Book is balanced off, and those balances are posted to the general ledger. This is the procedure to follow when the impressed float is topped up. Step 1. Total the payments columns in the Petty Cash Book and cross-cast them to the total column. Step 2. Check the amount left in the petty cash box. Notes and coins, plus the total value of IOUs, plus the total value of vouchers for payments, less the total value of voucher for receipts, should equal the impressed amount. Investigate any discrepancies. Step 3. Prepare a check requisition for the difference between the impressed amount and the amount in the petty cash box. The impressed amount, less the cash in the petty cash box, equals the amount for the check requisition. Step 4. Draw the amount from the bank and put it in the petty cash box. Enter the amount on the left side of the petty cash book. Step 5. Balance off the petty cash book by completing the double page, and start a new page. Step 6. Ensure that the balancing off is checked by a supervisor, who then signs and dates the balanced off pages. Step 7. Post the totals to the general ledger. For an example of this procedure, see page 220 to 224 of your interactive text study guide. Some companies do not use the impressed system for petty cash. They will reimburse the petty cash when the float in the petty cash box is low. This method is acceptable if the float is kept balanced, and the petty cash book is correctly written up. Once the impressed float is topped up and a new page started for petty cash, all the completed vouchers need to be taken out of the petty cash box. They must not be thrown away, they need to be kept for at least 7 years, so that when the company has an audit, an auditor can find any voucher that was written out from petty cash. The practice of holding archive records vary from company to company, but normally, the petty cash vouchers with their attached receipts, for a page in the petty cash book, are stapled together in number order, and kept in box files or a storage box by the petty cashier office, until there is an audit. The box that the vouchers are kept in needs to be clearly labeled to show the number of vouchers in the box, and the time period that they cover. After the audit, they can then be moved to a remote and long-term storage location. This is the end of Chapter 10. What will follow next is the quick quiz. After the quick quiz, do the online questions for Part B, Chapter 10. It will be good practice because the online questions are set out like the exam that you do at the end of the course. They will also test your knowledge of this chapter. Quick quiz. Question 1. Why do organizations need petty cash? Question 2. Who is responsible for the safety and security of the petty cash box? Question 3. What is the nature and purpose of the impressed system? Question 4. A. What details are shown on petty cash vouchers? B. What information is usually only added to petty cash vouchers when the petty cash book is about to be written up? C. What should be attached to a petty cash voucher? Question 5. What items are recorded on the left-hand side of the petty cash book? And what on the right? Question 6. Why might money be received into petty cash? Question 7. On what grounds could you ignore the sales tax element of petty cash vouchers? Question 8. State the 7 steps for topping up, balancing off and posting petty cash. After doing the quick quiz, do the online questions for Part B, Chapter 10. Do the questions, until you achieve 80%. Replay the lecture as needed.